Hello and welcome back to my channel. I'm Sarah Edens, a finance coach, author, and wealth mindset researcher, and I'm so happy you chose to join me here on my channel today. Go ahead and hit the subscribe button and let's get started. So today we are talking about what you can do if you hit an emergency expense and you have nothing in savings. And it's really interesting. I'll link to a survey that Bankrate does every year about emergency savings and how much Americans have in their emergency savings. And there were some really interesting statistics from the 2023 survey. They've been doing the survey for 13 years. And they found that in 2023, just 48% of American adults reported having enough to cover 3 months of living expenses. So just under half of American adults had that much money in savings. From that same survey, 57% reported feeling uncomfortable with the amount of emergency savings they did have. So probably just had that sense that, oh my goodness, like I have some, but I'm not sure it would really be enough. We always know how that feels. And then 22% of American adults surveyed in this year's survey reported having no savings at all. And it was the second lowest number in 13 years of polling. And that was across generations. So they survey Americans from multiple different generations. And what they found, and this is pretty typical, is that Gen Z had the lowest amount of savings. So 31% of them had no savings at all. And that's really, really typical because when you're younger, you just haven't had the time to build assets. You haven't had the time to build equity. You haven't had the time to start building value in your investments. You're just getting started. You're probably working a job that's not paying as well as how much you'll be making in 10 or 15 years. And so that's pretty typical. But even overall, they just were seeing much lower savings rates than people have had in their 13 years of polling. And so why is this? Is it that Americans are worse savers today than they used to be? I mean, I don't think so. What they found in the survey when they asked people why they didn't have more in emergency savings was that 74% of those people blamed inflation, rising interest rates, and unemployment during, for example, the pandemic, for all those people that lost their jobs or had to go find new jobs, had businesses that closed down. So they blamed those factors for why they didn't have more in savings. And I could completely relate with that because having had a business that closed down during the pandemic and then having all the disruption and upheaval during that time and then all the high inflation that we've been coping with, there has just been so much that I know has cut into my own personal savings rate despite my best efforts. And so it was really interesting to see that many, many other Americans are experiencing that phenomenon as well, of just watching it being harder and harder to save. But then the reality is that all of us hit these points where we have emergencies that come up and we might not have anything in savings. I know I've been there before, especially when I was in my early 20s after college, where I wasn't making a lot of money. My living expenses were fairly high relative to how much I was making anyway. And then things would come up and I would be like, okay, I have no plan for what to do about this. So we've all been there before at one point or another where we just haven't had that money in emergency savings. Obviously, the ultimate goal is to get to the point where you have that emergency safety net for yourself financially. And I'll link to my budgeting playlist, which is going to help you figure out how to get your money and your finances structured really nicely so that you can start to put money towards savings and hopefully ultimately also investing every single month so that you're building that safety net for yourself. But in the meantime, there's no shame in not having any savings. It's just all of a sudden having an unexpected expense of $400, $500, $1,000 or more can all of a sudden just become a crisis if you don't have an emergency savings. So what is the best things for you to do? So here's 4 things that you can try if you don't have any money in savings right now. So number 1, you can put your expense on your credit card. Now I'm saying that with a caveat because the Bankrate survey from 2023 also found that 1 in 3 Americans had more credit card debt than they had in emergency savings, which I can totally believe is possible. Again, just with all the financial difficulties people have had the last couple of years and inflation, people are running more in credit card balances right now than in any time in American history. So I can well believe that they might already have their credit cards pretty full. And then if you have an extra expense, there's just not room on the card to put that on. However, if you have a credit card that you keep around as kind of a safety net, which I talk about in a different video that I'll link to below called Should You Cut Up Your Credit Cards? If you keep your credit card around as kind of a safety net, then you can use it to cover those emergency expenses. And it's a lot easier than having to take out a loan or borrow from family and friends or have to work out a payment plan if you just have that credit card around and just keep it for emergency expenses. So if you have available credit on your card, that's a good way to use it in an emergency situation. Obviously, you don't want to get in a habit of doing that. Long term, you want to make sure you've got a savings account that you can pull from, but that's a good kind of short-term stopgap if you need it. Number 2 is to cut back on spending on absolutely everything except the essentials. So this is another way you can free up money in your budget for an emergency expense. So you can just reel back in all your spending on everything else so that you can funnel any additional money towards that emergency expense, whether it's a medical bill, bill at the vet, something like that, you know, whatever your emergency car repair that you had to make, what have you. You can just funnel all your extra available money to paying off that bill as fast as possible and just cut back on any spending on anything that's not an absolute priority, which those would include your housing, your food, your healthcare premiums, your insurance premiums, obviously, so you don't let these policies lapse, and then things like that. So you just want to make sure that you've got your main things covered, and then if there's any spare money that you can route towards paying off that expense, and then you can work out a payment plan with that company that the bill's from, that's a good thing to consider as well. Number 3 is to borrow from family or friends. So this one is also not a route that you want to exercise very frequently, or your family and friends will probably stop returning your calls and text messages because they're like, oh my gosh, what does she want this time? And every time she calls, it's always about money. So don't use this too frequently, but if you run into a, no kidding emergency, your family and friends and the people who love you and your community will want to help out, obviously. And so this is a route that you can take infrequently, but if you really hit something that's a big, stressful life event that comes with a big stressful expense, then that's something to consider. And then that way people can help you out and kind of give back that way. You also want to be very clear if you're borrowing money from family and friends, if it's a loan or if it's a gift. And just be very, very clear about that up front. If it's a gift, just express gratitude, write them a nice thank you note the way you would for any other gift that anyone would give you. But just make sure to express gratitude for that gift. If it's a loan, let me see, am I still recording? Oh, good. My camera was doing something funny. I just want to make sure I'm still recording. Brilliant. Okay, I'm still with you here. So if it's a gift, then express gratitude. If it's a loan, then what you want to do is actually work out a really specific payment plan. So you want to write down how much they lent you and then when you're going to pay them back, and if they want interest on it or if it's an interest-free loan. And you could even take it to a notary public and get it notarized to make it more official. But it's really important to make that distinction between if it's a loan or if it's a gift, because especially because they're your family and friends and people who love you, you don't want to take advantage of them either, or advantage of their generosity. So just be really, really clear. Even if this is your parents we're talking about, just be really clear on exactly what you're looking at there, and kind of what the expectations are so that it doesn't ruin your relationship with that person that you care about so much over money. It's never worth doing that. If you're worried about it, ruining your relationship, take out a loan instead. Just get a short-term loan from your bank or lending institution rather than take it from family and friends. Another kind of related option that you can do too is crowdfunding. So a lot of times if people have a huge medical expense for themselves or their child, or they have a really devastating life event, like they lost their home and didn't have insurance, or what have you. They'll do a crowdfunding fundraising campaign like on GoFundMe, which I'll link to in the description. And so that can be a really good way to give people in your community a chance to help you in a really meaningful way, and give back that way. And that is just a gift, because you're fundraising for yourself to get that issue resolved, financial issue resolved. But you could definitely look into starting a GoFundMe campaign as well if it's something like that. I've definitely seen in the past where people will do that if they get hit with an enormous, pretty much unpayable medical bill for themselves or their child. They will often set up a GoFundMe campaign, and that gives people in their community a really meaningful way to give back and help out, because nobody wants to see people suffer and struggle financially. So that's something to think about as well. And like I said, if you're borrowing from family and friends, get really, really clear if it's a loan or if it's a gift. And then fourth is to, like we said, another option, take out a personal loan. So if you don't want to impose on your family and friends and on their goodwill and generosity, then you can just take out a loan. So your lending institution will just run your credit score and come up with your loan terms. And then you can have a short-term loan that you can use to pay that bill off. What I would recommend you avoid doing is doing something that's called a secured loan. So sometimes banks will say, oh, like I see you've got a car that's paid off, so we'll let you take out a loan against the value left on your car, and then you can use that to pay the bill. I really wouldn't recommend doing this, and here's why. You don't want to have your car on the line on top of this other money that you owe this other company, just in case something goes south with the payments. You really, really don't want to do that. So I would highly recommend that you not take out secured loans in that sense, trying to pay off debt. Because you could conceivably end up in a situation where you can't get that bill really paid off, and then you lose your car, which would be really devastating, because here in the US, we really need our cars to get around. It's just not possible to do life without our cars well, it is possible to do life without our cars. It's just really inconvenient. Depending on where you live, you might be in an area that it's not a big deal. So I suppose if you live in an area where you can go without your car, if you lose it, in this whole loan situation, then fine, maybe think about it. But otherwise, try to just take out an unsecured loan. The interest rate will be higher than on a secured loan, but at least you won't have to worry about losing your vehicle. So that's really something to think about as well. All right, so that's my 4 tips there for you. I'll have 4 more in my part 2 on this that I'll link in the description when this one's released and when I get that one published, of what you can do if you hit an emergency expense and you have $0 in savings. And that can just be a very stressful situation. But really what it takes is just being creative and innovative in that situation and coming up with something that's going to work to get you through that, and then revisiting your budget when it's over and really getting to the point where you start really prioritizing saving, because that way you don't have to have it create a crisis for you next time. Thank you so much for being here until the very end. I'm always so thrilled that you choose to join me here on my channel each and every week, and I will see you again soon in my next video.